US President extends 90-day truce with China. Trade war truce would have culminated by the end of February in case of a no agreement. Remember, US had planned to raise trade tariffs to 25% from 10% on imports worth $200 billion from China. Let's do a three-point analysis on what this development, along with progress in other key event risks, mean for the world markets. One, what are the takeaways we have from the trade war truce extension? Well, extension of truce underlines the conciliatory approach, and this is in contrast to the aggressive stance last year, which was a key dampener for the global trade growth as well. Apparently, there has been a progress on key irritants between the two countries: intellectual property protection, technology transfers, agriculture, services, and also currency. Media reports also suggest that key modalities which need to be ironed out are also crucial so that Chinese reform commitments are followed through. Now further, as President Trump also indicated for a summit meet with the Chinese counterpart as well, apparently a deal breakthrough in the near term cannot be denied at this moment. 2. What has been the impact on US, China and the Indian markets? Well, as far as US equity markets are concerned, developments pertaining to Fed along with trade talks progress has helped S&P 500 to scale up 18% from the December lows. Remember, last week Fed minutes gave a supportive narrative, particularly on the liquidity front. Fed's liberal stance on balance sheets unwinding deserves a mention as well. Coming to Shanghai Index, it is already at an 8-month high, 20% higher from the January lows as well. Nifty amusingly had not participated in the downward drift in the last quarter, but it has also been struggling with the key resistance levels. 3. What can make these indices move beyond the following or the current prices? Well, for China, favorable declarations on the trade talks front and progress on the key domestic reforms is crucial. One of the key reforms where investors can expect progress is the deepening of the financial sector reforms. For US and the rest of the world, the key risk which remains on the tenterhooks is that of an orderly Brexit. Brexit deadline is also around the corner, that is 29th of March. There is still no breakthrough on that. Theresa May is hoping for a vote on Brexit deal on 12th of March. Alongside, UK is also renegotiating with the EU on the controversial Irish backstop. Back home, we take solace from the positive developments from the central banks as well as the trade talks. An amicable US-China trade agreement would be conducive for India, as the restoration of commodities supply chain would ease out dumping from China. However, Indian equities also grapple with the event risk of general election and also the recent border tensions. On account of these, high risk premium might continue to prevail for the Indian equities for the near term.